Good evening, everybody. We are delighted and honored to have with us this evening the winning team of Columbia Business School's Pershing Square Challenge for the year 2025. With us this evening, we have the three members of Team CSL, that's Carlyle, and we also have Fundamental Edge instructor and co-author of Pitch the Perfect Investment and multi-decade adjunct professor at Columbia Business School, Paul Johnson, joining. For those of you who saw our Team Valvoline debrief last year, you might remember that we had the team walk through their pitch and share their screen and slides. In the interest of making the most of this discussion and to have a chance to make it a little bit more interactive, what we're going to do is we're going to have a link to the video where you can watch the team present, and we'll make available a copy of the team's slides. And for those interested, you can also view the debrief that they did on Yet Another Value podcast, which went really into the nitty-gritty of the pitch. This discussion is going to be more of an exchange on the aspects of putting the pitch together that are on the minds of our fundamental edge learners, things like balancing time and efficiency and getting the messaging clear for an audience who's never seen the name before. I should also mention this team is going to be having 4 internships among the 3 members. So, there's not a lot of traffic on the road that goes the extra mile, and Team Carlyle has shown that in their pitch, and we look forward to having this discussion with them. Guys, would you like to do an intro, or should we just hop into the questions right away?
Hey, let's start. Let's talk a little bit about your background, because you guys met at Columbia Business School. I think most people listening will know this is a competition only for first-year MBAs, which is fascinating because you've had less coursework than if it was at the end of your second year, almost by definition. And for a lot of people that go to business school, there's at least some requirements they have to get out of the way before they can take the more interesting electives. So this comes at a time when you haven't necessarily had the full depth of the value investing program at Columbia. So you guys win this before you had that full menu of spectacular courses. So I'd love to hear a little bit about each person's background, how you came together as a team.
Maybe shall I introduce what this class and challenge was, and then I'll let the guys start with their backgrounds and we can come back to me. So applied security analysis, it ends up being a class taken mostly by first years, but it's open to both first and second years. And in the past, people have actually been able to take it more than once, but that was kind of a relic of how Columbia had set it up before. But you're right that this is, for most people at CBS, kind of this first chance to do a really serious multi-month project and commit, a meaningful amount of time to it in a different way to how you would scramble for, a shorter term competition. And you're right that as a result, all 3 of us, we're still waiting to find out if we get into the value investing program or not even. And hopefully this is, a nice way to show what we can do. And maybe it's even used as a mechanism for that program.
All right. So you guys were all 3 in the class and you got to know each other in the class. Did you select each other, or was the team kind of forced on you?
Well, there's a bit of lore that I heard about this particular team, Paul, and that is that before the class started, they wanted to work together, and they actually started discussing this. Correct me if I'm wrong. Was this like over winter break you guys started putting pencil to paper in terms of idea selection?
We were thinking about the approach on how we would go about finding an idea, but we did, select our teammates and come up with, just who we were going to work with and how we were going to actually go about the idea generation process. But the actual nitty-gritty really started in January in earnest.
And how long did you go? The list process, you just threw out ideas? Because I think that's an important part, not from a competition, but just as people go to look for stocks to work on. I think one of the biggest challenges is getting a good idea, because part of the business I find most fascinating is, let's say you guys are very talented, obviously, you spend a fair amount of time, you don't get that time back if at the end you stop and say, hey, there's not enough juice here. you know what, either the idea is too convoluted, or, you know, maybe the market's not that wrong. Maybe, you know, the issues are too, you know, low probability to really work out. And I think that a lot of people end up chewing up too much time on the idea generation part. They don't have good filters. They don't have sort of that quick test. So how long did you take, and how quickly did you guys focus in on Carlyle?
So we were definitely guilty of taking too long, and we have a slide that talks through, you know, the three pillars we tried to use to speak the same language and filter things down. But something you wrote about in your book, Paul, actually, that is pretty helpful is that you do need to think about who your audience is going to be. And in this competition, it's a bit tricky because headline wise, it's going to be Bill and the Pershing team, but there's always a variety of guests. And actually, there's also two intermediate steps where, for example, Andrew was one of the intermediate judges of the actual class process. And you're pitching to a lot of different audiences who come and give you, slightly different perspectives and are potentially looking for different things. But the three of us met in a class that was really focused on like nonlinear change and tension. So for us, one filter was kind of looking for companies that fit that criteria because, one thing we learned was that's a good way to end up with a project that's not a pass or a neutral, in that you're much more likely to end up either pretty positive or pretty negative at the end of it. And then another filter we had was just trying to understand, what kind of companies actually fit the Pershing Square portfolio on a headline basis, but not go for the most obvious thing. So some of the characteristics that attracted us to Carlyle were that it's not followed by, 30 sell-side analysts who already have done more than the amount of work we'd be able to do. It had, competitors that are privately listed that don't give you that much, information up front that you could really do some work on if you're creative and can take the time and can try to meet people to understand, what's out there. And thirdly, Columbia is really big on value-added research, as they call it, which is going out and talking to people. And having decided this team of three guys, we tried to be, and having also experienced this process of needing to reach out to a lot of people on LinkedIn and having like a very low hit rate and a low interest rate in people speaking to us, I think we were a little bit more tactical than some of the other teams in terms of choosing a name, which is, a construction industry that, us reaching out and actually going to a trade show and meeting people in person would be an advantage as well.
And just to speak more directly to the three different funnels that we kind of used in terms of finding the idea. First funnel, we ran a few quantitative screens at a high level, for this class was US based, at least 3 billion market cap, and a daily trading volume of $25 million. And then second funnel was we perused the different investment newsletters that we had subscriptions to, primarily Value Investor Insight, but also Manual of Ideas going back many years and trying to dig through different ideas that people have pitched in the past. And Carlyle had been mentioned a couple times, mostly as a footnote to another company that was being spotlighted. And then the third was companies that we've researched in the past and have a lot of familiarity with in our experiences. So those kind of three funnels were the main approaches that we leveraged to find Carlyle.
And once you found Carlyle, was it kind of everybody came together very quickly and said, this fits really well, let's lean in?
There was quite a bit of debate. Yeah.
Yeah, we were all arguing quite a bit actually about each of the names, and we whittled it down to, let's say, a top 5 to start out, and then voted on our top 3. And then really I was not a fan of Carlyle for quite a while, so I was getting dragged along through the final voting stages. But it was a lot of helpful debate trying to identify the important factors, and we all came to a consensus that it's best if we all don't agree, because we can approach the problem from different perspectives. And I think it resulted in a much stronger, more compelling final thesis, final pitch.
I think go ahead, Andrew. I was just going to say, Eric, I think that's a very veiled comment that diversity helps. So be careful, because You might give people the wrong impression that actually having a team with variant perspectives and forcing consensus, really forcing it through research and logic and analysis sounds like a dangerous game to play in the current environment.
Yeah, and go ahead, Dimitri.
You go ahead, Andrew, and then I'll add 2 comments.
Well, what I was going to ask was kind of a follow-up because sometimes, especially when people are newer to pitching stocks, they're waiting for the perfect setup or the stock that has the least hair on it or something where you can cleanly articulate a path to a resolution. But the stocks that are the best understood tend to be the closest to fairly priced. And it's the ones where there's misunderstanding, where there's the real opportunity and juice to get from where it trades today to where it could trade in the future, long or short. My question was going to be to Eric, because I thought it's an interesting one about how you kind of balance I don't really know if this is the right idea to spin our wheels on versus, wait a minute, this idea could really be a good one. Eric, can you spend a moment talking about kind of what your initial or principal objection to Carlyle was and kind of how that evolved through the development process?
Yeah, so it's funny that you mentioned the sort of natural tendency to avoid the hairier situations. That was actually, it was between this and one other name, which we don't have to get too far into, but it was a much hairier situation. There were 3 segments. There's actually a spin-off or a proposed spin-off of a part of the business that I thought, okay, this versus like a single building products company, one segment that they've whittled down versus the complexity of this. I liked that idea actually a lot more. I thought there was more potential for research and like a storytelling element to it versus Carlyle. I thought there was really like this one margin linchpin thing that if that wasn't going to hold, the whole idea would blow up. I didn't know if it was strong enough. And I'm glad that we settled on something like Carlyle versus the other with a lot more uncertainty, but it could have probably for me gone either way. I would have preferred the more complex idea, but I'm glad that things turned out the way that they did.
I want to hear what Dimitri is about to say, but Eric, I want to come back to that for a second because I think you've touched on something to me that's incredibly important. The best ideas are simple.
Yeah.
And the more complex they are, they're harder to tell. It's really hard to get the PM to buy into them. And you have more things that have to go right. So I think every great stock idea over the last 20 years comes down to a sentence or 2. So I think we shy away from that because it's too simple. Now you did raise something that's important. If you're wrong, I guess you only have one thing that's going to drive it. Dimitri, I don't want to skip. You were going to have a couple of comments.
Well, I think you've kind of touched on exactly where I was going, and both you and Andrew have given this advice before that, all else equal, it's better to keep things simple. And especially in our case, we knew each other from another class, but we hadn't necessarily worked together. We have different starting points and different backgrounds. And the reality is, if you're picking something you never worked on before, you don't really know if it's going to be a good idea. So it's always, easier, especially when you're going to have a limited amount of time to convince someone that this is a good idea, to go for something that's a simplification rather than something that has a lot of moving parts. So that was a little bit what probably helped us convince Eric to go for the slightly simpler story, even though it was less maybe exciting and had fewer pieces to really that could really move as much. That one could be maybe also another great investment idea in the long run, but it would just be something that would require a lot more careful explanation and we weren't sure we'd be able to pull it off, basically.
But I think there's a lot of tension there. You have this tension of opportunity cost because once you pick a name, you don't have enough time and energy to go back. So you're sort of committed to that. That's always, I think, one of the great dilemmas in the business. Second, we just think simple names can't work. The more complex, and everybody on this phone's an analyst. We like taking things apart. We like seeing how they work. And so the more complex, I'm always drawn to that. But then a reminder, as Paul contributed to the book, which is how's the next person going to figure this out? I mean, you guys have done all this work. You figured out all these moving parts. It's clear as day it's going to work, but trying to get somebody else up to speed in a competition, let alone in real life, I've really learned that, good luck with that. More complicated, the harder.
And this was also the challenge here, forget, downloading the information we learned to the judges, even between the three of us.
Yeah.
When you go off and do some research, not everyone can take part in all conversations simultaneously. And especially when you're at a trade show, kind of that was probably a big challenge of, how do we actually make sure everyone is learning the key points from each other? And it's just, I guess that's the challenge of being in a team. And on one hand, you don't want to be that investor who's on a very lonely journey, just researching on your own, and whatever goes right or wrong, it's just you with yourself and your research. But at the same time, it does create this, hopefully mostly healthy tension, but also big difficulty of, you might interpret something one way, but someone else, when you tell it to them, really doesn't see it the same way. And then finding that happy medium of how do you then boil that down to a simple slide when three people are contributing to it is also not very easy.
You've given an answer to a question, partial answer to a question I want to ask, which is, all right, now you have Carlyle. At some point, Carlyle becomes number one, I'm assuming. How did you decide to split up the task?
Yeah, that's a very good question. I think from our perspective, we thought about it in a few ways. First, we had two key deliverables. We had the presentation deck, and then we had the model. And so we knew that for the model, we would be wise to have one person own the model and all the financial analysis. Well, maybe not all the financial analysis, but at least just own the model inputs and have the other two teammates audit the model. And then the presentation deck was more of a shared responsibility for all the three of us. And then the other large work stream that we were organizing around was the actual research and how we would conduct value-added research, or VAR. So maybe Eric or Dimitri, you guys can speak to that component as well.
I mean, we iterated the deck. What was it, guys? Like 20 times or something. It was just a lot. And each of us would break up into like our kind of focus areas and try to master our own domain first. And then everyone was contributing to each other's sections thereafter. And we iterated so many times. But then also as we were building out the appendix, like everyone kind of either volunteered or we assigned sort of different components based on people's strengths. And yeah, like Dimitri said, the healthy tension was created, and then a little bit more, I think, beyond that as we progressed through.
I think the reality is, this isn't like a professional team, like people had other things that they had to prioritize at various times. So even though we tried to assign certain bits of work, it was more or less, voluntary basis of, if you feel very passionately about something that should be included and that we can find an angle, then someone would usually step up to take ownership of it if they could see a way to get it done.
In terms of the deck itself and how, for those who have a chance to go through the deck or watch the presentation, you'll see that there was clearly a high volume of substantiation of all the statements that were made in the pitch. One thing we talk about at Fundamental Edge is sometimes the more novice analyst tends to produce a book report, but not really an articulation of what the mispricing in the stock is. Now, this deck did a great job of having the backup, but also making sure that it was advancing to key messages. My question is, how did you calibrate amongst yourselves what would be additive to the pitch and communicating to an audience of strangers versus what were the things that were nice to have in your back pocket, but which would dilute either the punchiness of the pitch or not really convince as much the panel of judges?
We had Oh,
Go ahead, Eric.
you might be you're heading in the same direction here, but we had a ton of calls with investors and mentors and people that were willing to help us out with crafting the through line of the story and the really key bits. And then also we would always ask for 5-10 minutes of Q&A. And that helped us to build out the appendix slides, but also to say, hey, like this might not be necessary on the main piece of the deck. We can move that back. Or this gets asked about a lot. Let's find a way to put this in more simply. Like it was just a lot of practice and getting the market feedback directly instead of sort of trying to assume, and then you're too late when you get to the final round.
Yeah, I think this is one thing that I was going to add to because, on the job, unless you're on the sell side, you don't necessarily get that chance to iterate your message over and over again. And as Eric was saying, doing Q&A actually helped us pull in certain things that we then realized, this is going to come up anyway. We should just address it. And between, the 5-minute version of the pitch and the 10-minute, we actually completely rearranged the slides because we realized it just made more sense to do it in a slightly different order. But, I guess the practical advice is if you have someone who's slightly lower stakes than, your manager who's evaluating you, it is useful to just try it with a friend or with someone on the side to even understand what I'm talking about, having spent that week or 2 weeks or month working on it to be able to appraise, does this still make sense to anyone who hasn't done that level of reading, and can I bring them along?
Yeah, I think you touched on something in the job. You may not have anybody, or maybe you have a colleague or somebody else, and getting that feedback, I think, is incredibly hard. And you only get often one chance with the PM. And if you haven't pitched it just right, you could kill an idea before you've really been able to explain really what the opportunity is. Having written the book on it, and I've come to the realization 8 years later that the goal of a pitch is the boss to say, keep working on the idea. That you're not going to get anybody to buy the stock at the end off a single pitch. But what you do get is permission to keep working. And they ask questions. By asking questions, and we say this in the book, but they're revealing what their subjective criteria is. And you want that interaction, but we really wanted the boss to say, keep going at the end. And you guys had that in a sense because you kept telling the story to people and they said, no, this is really interesting, keep going. And then finally you had the final pitch to the team. And I think that's kind of a way of thinking about it. Although I guess 2/3 of the way through, if you realize that it was a dumb idea, it would have been hard to regroup. I think at that point, a lot of time commitment, the sunk cost aside, you may not have enough time to come up with a second idea.
Yeah. I mean, I have two things to offer, and you can keep this or not, up to you, because maybe this is interesting. Because for me, reflecting on this process made me realize much more that, in my last role in particular, and you write about this in your book as well, Paul, in terms of kind of the micro expressions and the way you even communicate your idea can really determine if your manager decides that you know what you're talking about or not, and whether they trust you with your time, essentially. And that was something that I was maybe slightly naive about and didn't really think enough about, because I wanted to tell him, how I was going through my thought process rather than thinking about, okay, what is the outcome I actually need here from this? And, as you say, it's much higher stakes on the job, and you don't necessarily get that.
Well, I think I want to hear your second comment, but just to add one thing, I think it's until you develop the skill to hone in on what the key issues are, you really want to get credit for doing the work. Sonkin came up with this idea of the puzzle, right? You want to say, hey, boss, I counted all the pieces, they're all there. Or, hey, boss, I put in all the border, but I'm not sure how the middle should look. But if I pitch it to you with your wisdom and experience, you'll be able to say, hey, Paul or Dimitri, or, Eric, this is the way you want to think about it. And I think that's the tendency fairly early in your career, is show them how much work you've done, because you've all done a ton of work. You want to get credit for that. Not 100% sure what the right issue is. Maybe the boss will figure it out. But I think Dimitri said it beautifully, which is that what you've learned in this process, you've got to get to that level. You've got to get past the work and to the insight, why it's mispriced, what the event path is going to be, how this thing's going to get repriced as the events unfold. Great comment.
Absolutely. And then this kind of maybe helps bridge to where I was going, and you should definitely get to one and Eric's point of view on it too. But Professor Harmon and Professor Isaac, they really emphasize this tool of using the IRR bridge up front to try to determine what matters and what should you be spending your time researching. Almost, using that bridge as like, okay, if half of your IRR comes from one part of the bridge, that's what half of your time should go to. And equally, to your point, Paul, one way you can understand if an idea is feasible or not is just, am I even getting an IRR? Just very roughly speaking, at the very beginning, after, 1 or 2 days of reading, can I see realistically, even in, my most bullish scenario, is this a potential idea that could lead to something, or am I just talking about, crumbs on the edges or not? And that wasn't necessarily something I'd used before. And even though it's probably a bit uncomfortable to use that at the beginning when you don't have a good sense of really what the sensitivities are, it is a
Right.
way to orient yourself. Or at least I think that's what we all found, hopefully.
Yeah. And I'm glad Dimitri brought up the IR bridge framework because that was very central to how we were evaluating the different ideas, the 5 to 7 ideas that we were settling on as part of our final process in picking the company. Because on top of just the general framework, it also was very important for us to figure out to decompose the IR bridge and which components were driving the potential return and value for each idea. And so across the different ideas, we were very deliberate about picking a name that ideally had a high current yield or statistically somewhat cheap, and then other drivers were the revenue growth, margin expansion, multiple expansion. And so we were really focused on trying to find ideas that were driven by a good current earnings yield, potentially good variance from the market in terms of revenue growth or margin expansion, and then really leaving that multiple expansion component of the return being more of a cherry on top and not a central part of the driver of return.
Quick question, side comment. How much did you guys use AI at all in your research process?
I think actually almost zero.
Zero for me.
Well, for me, I did actually leverage GPT in terms of trying to get myself very quickly up to speed on the industry. So this industry is, and the product itself is relatively simple. But I found, leveraging ChatGPT to understand what a TPO membrane was, what the different petrochemical derivatives were in terms of being able to manufacture these different products. I found that very helpful. And obviously, I also kind of tried to validate that information through other sources. But on my part, I did use ChatGPT to help me bring myself up to speed.
With hindsight, was there opportunity to use it more, or you think you didn't use it, didn't need it, the story really didn't lend itself, other than you said coming up to speed on terms or structure or practices?
Personally, I thought this was a great example of a pitch and an area of the market that sort of showed me that, my job's not going to be taken by AI. Because if you think about the top 4 players that control 80% of the market, only one of them has, that simple disclosure with the simple segments that you could feed into ChatGPT. Like for Johns Manville and GAF, there isn't really that much information that you can find either yourself or through Google or through ChatGPT, except for maybe, I think we tried to run the key executive departures through it a little bit. And in a way, like it was quite nice to see that there are these areas of the market that can really be inefficient and not easily researchable unless you want to go and speak to someone directly, which is not something ChatGPT necessarily has access to.
I think maybe one thing, if I look back, that I could have used ChatGPT for was pulling out the like regulations and energy codes and building codes for various different regions of the country. I think instead of reading 400 pages of legal text, I could have probably made that a little bit faster through AI. But that's just my one take.
Oh, you were going to say, Dimitri?
I don't know. I mean, we probably all have slightly different perspectives overall as well anyway, and it's kind of one of these nice evolving topics. But we had this Graham and Doddsville interview. I think there was a comment in there that really resonated with me that, at the end of the day, you need to make your conviction and your idea your own, and sooner or later that involves you going to the source material and really trying to grapple with it. And in some ways you can shortcut parts of that, but you cannot fully like rely on that on kind of a second, third party entity.
Yeah, it's a topic of great discussion these days here at Fundamental Edge. We have that series where we talk with different solution providers who make use of one or another application of AI, and we kind of zero in on which aspect of the investment process either can be covered more quickly or with greater depth and is made easier through the use of a tool. I have a question for the team related to, the whole experience. Like, you've gone through it, you went from sourcing the idea to diligencing the idea to pitching the idea. And in this case, it was for kind of a one-shot endeavor. You can't make a whole portfolio or a whole fund out of one name in most cases. As you think about kind of the investment seat where repeatedly you're going to need to be, developing ideas and getting them up and off the ground, I guess I'd be curious to get your perspective on, looking back at putting this pitch together. What are the things that, it's almost like a postmortem, really. What are the things that really went well that you would carry forward with you? And what are the things that, if you could turn back time, you would have approached in a different way and that you probably would approach differently going forward?
I mean, for me, I can get us going. Or Eric, if you're ready, you can go.
I mean, I just have one thing to say, which is that like I think one thing that went really well with this idea is finding something that's simple but also not covered very much. So it's like it gives you a pretty smooth start to something that could be very high ROI, assuming that there's some debate there. But yeah, go ahead, Dimitri.
I was just going to say, just in terms of processes and repeatability, I think just whenever you work with new people, it probably does make sense to do that painful step of getting to know each other's team norms and understanding, how are we going to save things down. And we did do a little bit of that in terms of deciding on a shared drive and kind of the format of kind of file names. But there's always going to be certain things that maybe are obvious to you if you've worked in a certain way, but are equally obvious to the other person in terms of the way they do it. And just understanding that kind of, work style for a more iterative process is probably more critical than for a one-off where you can just say, okay, let's forget about it and move on.
Yeah, and I think the one thing that I would add is to Dimitri's point, setting those team norms and setting the right expectations up front as a team on how we work, how often do we meet, and how do we go about cross-checking and making sure that we are dotting all our I's and crossing all our T's in terms of the different modeling assumptions and the different steps in building different slides and down to organizing the script on how we decide to present ourselves. I think just reducing friction in all those different parts and pieces of working as a team and doing as much of it upfront as possible makes the whole experience a lot easier.
And just, how do you get the best out of each other? And
yeah,
we had a very unusual guest speaker come to Columbia, and usually including kind of what we've been talking about, it's about how do you adapt yourself to your manager, but one interesting thing this person had said was, in this case, he will hire very unusual analysts and try to set kind of the process up to match their strengths and to be able to get the best out of them, even if, that inconveniences him. So in this case, where we're all kind of a team of equals, putting yourself in that managerial position of, I want to get the best out of my teammate, is something that, we could have been even more intentional about.
Did you guys like each other more at the end or at the beginning?
TBD.
I think there were some ups
Nah.
and downs for sure. I mean, we're all like, I think the thing I really respect about our team is we're all relatively direct people, and we're willing to kind of say it how it is, and also equally receive it the way it is, even if, it's not always the nicest thing to hear. But ultimately it meant that we could actually progress and resolve discussions that were more, tricky or potentially emotional. So, but that's the nature of it. At least, everyone cared and was invested and wanted to do this, and that understanding kind of remained from the beginning.
Well, it paid
Yeah.
off. So
It's-
obviously
Right.
the
It's
right
it's
call.
it's one of the best features of the entire industry. In fact, you can yell something or you can whisper it. In the end, you're either right or wrong. And being adaptable to that and understanding, that this is one of the rare jobs where it is your professional obligation to put yourself in the shoes of the person on the other side of the trade. They're trying to make money, same as you. You're long, they're short. You can't both be right at the same time. So it really keeps you on your toes. The late great Charlie Munger put it better than I ever could, which is, don't argue something with somebody until you can explain their argument better than they can. And it's a great principle for matters such as these.
But this kind of thing, on one hand, you can be right or wrong about kind of the outcome of a stock, but then in terms of the right way to communicate it, there's like a whole range of ways that you can be right or wrong about.
I'm glad you mentioned that, actually, because Paul and I, in instances where we've been judges for stock pitches, there are really two parallel rails that judges are asked to evaluate pitches on. One is, was this a buttoned up, cleanly communicated pitch, and do I evaluate it based on that? And the other one is, would I buy this stock? And sometimes the pitches that are self-contained are, very nice to look at and things like that, but you wouldn't put a dollar of somebody else's money into this stock. And then there are other ones where it's like, okay, this is a little bit messy, but in the end, I think this pitch is going to work. And so that's always something to balance as you're getting a pitch together as well.
Using that framework, I suspect the reason that you guys got all the dough is that because you did both. You presented an idea that at the end that clearly you'd done the work. You got what the essence was. You figured out what the mispricing was. You saw the event path, catalysts that would reprice. And it's an idea that people want to own. So I think you're probably, the reason that you did so well in this is you did both of them.
It's what they did, and this is the thing I mentioned to some of the fundamental edge students, which is when you're getting a pitch together, your work should be smart enough that you have figured out something that the street hasn't, but your catalyst path needs to be dumb enough that the market is going to price in the work that you did. And so this was this pitch had a clear quantification of the amount of roofing replacement that was going to need to be required by hook or by crook over the next 5 years versus where the street was. And also a clean understanding of the business's new and improved margin structure, which you would see the operating leverage as those roofing orders came in. And so the improvements in the business would be empirically observable, undeniable to any sidelined observer. And it would be all the more distinct because there aren't a lot of public comps. So, you kind of identified something that was heading this way before everybody said, sat forward in their seat and said, well, wait a minute, what's going on with this Carlyle? You were able to see it coming, and you articulated that to a group of people who might not have heard of the company before the competition.
I love the way Andrew said it, but I must say that he made it sound a little easy.
I've been guilty of that from time to time. It
I-
is simple, but not easy.
That's my favorite line about the business. Simple, but not easy.
Well, this has been a really fruitful discussion, a great look under the hood of the ups and downs of getting together a pitch that in the end stood on its own 2 feet and won the approval of a tough crowd of judges. Paul, I don't know if you had any other questions for the team.
No. I just congratulations. Identified a great idea. You worked well together as a team. You brought it to fruition. You used your mentor and networking well to understand what you needed to do. I just every once in a while the process works and the right answer comes out. So I tip my hat to you because you guys really deserve this.
Maybe
Oh,
if I can add one closing comment, because
Yeah.
for me personally, both you, Andrew, and you, Paul, probably more indirectly than you realize, gave us as a team a lot of useful things to consider, because I actually spoke to you, Andrew, before I was coming to CBS even, and throughout CBS you've come twice to share your advice and have said some very upfront and frank things about how exactly the industry works, but also how people perceive you when you present, and obviously also helped us as a judge and mentor yourself in the intermediate stages of this very kind of competition. And Paul, in your case, I remember coming to a class as a guest on a Saturday and listening in, and you also gave a guest lecture and had some, unique and different things to consider in terms of valuation that hadn't really considered before, in terms of, the persistence of the business. And these are things, maybe we didn't discuss in the context of you guys telling us them directly, but at the end of the day, they are kind of critical to what made or would make or break kind of this idea as well. So, if anyone watching this is lucky enough to interact with either of you, either through Fundamental Edge or otherwise, we highly recommend it.
But no, I'm very flattered by the comments. I once said to a professor, if I touch a single student a year, I will keep doing what I do. So you've fueled me for the second half of 2025.
Yeah.
Maybe just to add, and I have to echo Dimitri, I have watched Andrew's videos and I read Paul's book before coming to CBS to get myself prepared to do a lot of pitches during this program. But some of the advice that Paul shared in his book, in terms of just not just having a good idea and being able to build and present in a coherent and effective manner, but the different body language that you convey while you present is just as important, as well as how you dress. But I wanted to also touch on the fact that when we were picking Carlyle, we were also, whatever idea we wanted to focus on, we also wanted to make sure that we were interested and passionate enough about the subject to be able to research in depth. I think that was a very key thing for all three of us, because if we were going to be selecting a company that we weren't really interested in, we wouldn't have the staying power for 3 months to really talk to 80 people, go to 3 industry trade shows, and really try to understand a company from top to bottom. So I think that if there was one parting advice I would give to others looking to build strong pitches, it's try to pick a company that you can wrap your head around, and also a company that you are at least somewhat interested in investigating.
I think that's a great comment. I always thought the sexiest names to work on are the ones that make a lot of money. I've had people say, "Oh, that's such a boring industry." I don't know. Stock looks pretty interesting to me. So I think you guys nailed that. Eric, any final comments? You're clearly the quiet one in the crowd.
Yeah. I guess to anybody who's looking to do the Pershing Square Challenge next year, it's a lot of work. Find a good team, make sure that you understand what you're getting into, and try to I guess don't get lost in the forest for the trees or whatever. Try to keep the big picture in mind. It's a good thing. It's all worth it.
Great comments.
Well, thank you very much. It's been a delight and an honor to have Team Carlyle join us this evening. And thank you very much for the insights, guys. We learned a lot.
Yeah, it was great.
Thank you.
Really great.
Thank you.
Congratulations.
Thanks.
Thank you for having us.